All right, it is that time. We are here at our group mastermind. It is June 27th, 2025. So that means we are officially through half of the year 2025, right? Good stuff. Something I think that is important for us, right? I like to at least share some things that I'm seeing happening in the industry following some of the changes and things that are going on. And something I think all of us could probably agree on is the market has changed quite a bit. Good, bad, indifferent doesn't really matter. But I think a hot topic, at least amongst the agents I'm communicating with, is around pricing. Um, some of this is tied to we're either good at the craft of pricing or we're not good at the craft of pricing. I went out of my way. Actually, I think Joni's on the call, but I went out of my way to I have a friend who is at it's called the Uniform Standards of Appraisal Professional Practices. And I just wanted some feedback on kind of some things that I was curious about on the appraisal side of things. And the only reason I'm bringing this up is I want you guys to consider this new form that we created. Peter, you're our guest. You might appreciate this. So this is our ARV worksheet. And the reason I'm bringing this up is what I'm starting to see is that our CMAs, or at least how we've done traditional CMAs, are getting scrutinized pretty heavily. Now, I work right a lot in the investor space, which means I'm working the DSCR loan world, hard money loan, private money, and desktop underwriting is starting to be probably more on the front side of things with these lenders. Even if we get the opportunity to meet the appraiser on site, and even though we get to provide them maybe some comps, what I'm hearing is about 60% of the time, although an appraiser appreciates the comps you're giving, or that there is a scenario maybe where we are all having a hard time finding properties to give us the comps that we need. What I find interesting is that they're saying about 60% of the time the appraisers aren't even using the comps we're giving them, right? So that's a bit of a challenge for us, right? Um, and I want to make sure that you at least hear what I have to say a little bit about this, because I think this is a direction that it's starting to go, right? We know that most traditional buyers out there are looking for a property that they can move into that they don't have to worry about. We already have an affordability challenge. We already, know that rates are there. We know, and it probably feels like in your market that buyers have put the brakes on. We certainly feel it here, depending on the property, but more importantly, depending on how it's priced, right? So, what can we do maybe moving forward? And when we teach the CIAS class and we talk specifically about the after repair value, the ARV, what we're ultimately trying to find are properties that have been completely remodeled, renovated, whichever word that you want to use, but they're at the top of the market. In other words, they're at the top price point, but they're also hitting, for the most part, where the demand is. Another way you could look at this, if you're in the Phoenix market, as an example, or if you're in, Texas or Nevada or Florida, where let's just say you're comping a property that's 10 years old, but just down the street, you're competing with new home construction. Everyone on this call should agree that a buyer who qualifies for a home, if they have access to new home construction, they're probably going to look at it. And if we just think about, right, that concept around people really want to feel like what they're paying for is worth what they're paying for, right? And so in those pockets where you're competing with new construction, if you're looking at what new construction is doing, that's the same thing as top of the market. In our market here in Los Angeles and Orange County, we don't necessarily have a lot of new construction, but we definitely have a lot of remodeled homes, and those are top of the market. So my opinion is, if you can get really, really, really good at understanding what top of market means in your backyard, I think that that's going to be huge. This worksheet here, I apologize. What we're talking about top of market is this number right here, that after repair value. And the trend we're starting to see is that even appraisers are getting to this point where they want to understand top of market and they want to reverse engineer it. And what are we talking about? We're talking primarily about condition. And I want to just share with you what we see consistently in the market. Now, I do have a question for you guys. Do you think that we're in this market where a seller can just list their house and they're going to get 25 offers right out of the gate?
Nope.
Not so much, right? And it's changed a little bit. And I know that there are circumstances and there are pockets, and even some of us might be in areas where we're still seeing multiple offers. We are, but we're seeing multiple offers for this product because we have investors who are looking to remodel a home to do what to it? To get it to newer condition. And so what we're seeing time and time again is if I can establish through the right comps, in other words, I'm pulling comps that are remodeled, and it doesn't matter if the seller did the remodel, it doesn't matter if a flipper did the remodel. What we're trying to establish is what's that top of market, that ARV. This property right here, how does it relate to the good, the bad, the average, the below average? And this is what we're seeing. We're seeing that I know that this person could sell this home for $750,000. And through the traditional method of running comps, maybe this agent found the right comps and justified $620,000 for the asking price. The problem is because it's average, above average condition, they probably really weren't searching for above average condition comps. The challenge that I'm hearing from appraisers, the challenge that I'm hearing from even our hard money lenders, as an example, is that a lot of agents are lumping comps in, and it's confusing what the actual value of the property is. And this is just a great way for you, in my opinion, to say, hey, Jeremy, listen, I appreciate you making the time to have a conversation with me about selling and marketing your property. Now, you understand, right, that there are properties out there that are brand new construction, right? So how would you compare your home to brand new construction? And hopefully Jeremy is going to give you some kind of a response, right? What we have to have the buy-in of the property owner. The idea is to be able to say, hopefully, to Jeremy, listen, we agree that your property is at least in good, if not average condition or above average condition. And I want you to understand that not just the demographics of the market. This is where traditional buyers are. This is where investors are, but how it relates to if your property was fully remodeled, we could probably get $750,000. And the great thing about talking to me, Jeremy, is that I have options for you. I can bring you a cash offer, right? So we at least know what the floor is on the property. I can introduce you to some amazing companies that can come in and help you remodel or update your home so that you can get top dollar, whether you want to come out of pocket or not, or whether we want to finance that portion of it. We can get you to top dollar. But in the meantime, you're not there. And we have to look at properties that are above average. And more importantly, what are people paying for above average properties? And right now, what we see across the board are a ton of above average properties on the market, and they're all priced right here. They're all priced 8 to 15% above what anyone's going to pay. And then if you start watching days on market for these properties, it's pretty interesting to see how it's accumulating. So I just want to bring this up to you. If you're not already using this worksheet, I encourage you to do it, because if you're scrubbing properties every day, you're already hopefully establishing what ARVs are for these properties in your pocket. Hopefully you're finding some deals. But if you're doing it consistently enough, like we are, you're going to soon get frustrated because you're going to see an above average property that makes a great candidate for a flip, but the listing agent has it listed $90,000 more than what it should be. And it's this gap that we have right now in our industry. And we're probably going to continue to see that depending on what happens with interest rates and what buyers decide to do, and if there's any pricing corrections. Now, I'm bringing all that up to say there is a good chance that you're going to continue to hear headlines like prices are going down, the market's going down, right? You're going to hear those things. All I want you to do is just be an adult and go, if this property was overpriced to begin with and it ends up selling for $550,000, does that mean the market's bad? And that's what the headlines are going to trick the clients into recognizing. Now, there's another great influencer out there. You guys probably heard of Pace Morby. He did a great video the other day, which I appreciated him doing. And the video is called "There Is No Lowball Offer." And if you watch the video, he's talking exactly about what I'm talking about. And if Jeremy has this listing for $619,900 and he's got no buyers for it because it's not in good enough condition for a traditional buyer to want it, but it's in perfect condition for an investor to buy it, that property is worth $525,000. And so the idea is that, yeah, in theory, based on how Jeremy priced the home, it's a lowball offer, but it's really not a lowball offer because Jeremy overpriced it to begin with. That's what we're starting to see a lot of. And we're going into that market back to the appraiser side of things, where an appraiser has a responsibility to let the underwriter know what's happening in that market. More days on market, fewer pendings, less closings, right? Those are indicators, right, that we all kind of need to pay attention to. So what I just want you to consider is you have a great resource here that if you get good at this, I think it's just going to help you across the board have better pricing conversations with property owners. And more importantly, maybe when you're submitting offers, puts you in a better position to at least justify why you're submitting an offer that's less than what asking price is. So any questions on this before we move on? Does that make sense to everybody? I hope so. Because the CMA world is changing significantly and technology is influencing it pretty heavy. So I think we need to be on top of these things. All right. Before I actually introduce our guest speaker, yeah, Jeremy, go ahead.
Isn't that is that to be used in conjunction on that illustration you showed of a house on the CIAS training? I think it was day 1 or 2. Yeah, day 1.
Yeah, when we were talking about conditions.
Well, yeah, and you said use it for listings or winning listings.
Well, it's at least for having the conversation, right? The conversation I want to be able to have with you is I want to be able to say, Jeremy, based on the condition of your property, would you feel that it's brand new condition, it's in good condition, above average, average, or below average? So the first thing, Jeremy, I want is the seller to have buy-in on what the condition of their property is. And then based on that buy-in, I want to be able to have this worksheet because I want them to understand in our strategy to sell your home, one, we don't want to leave any money on the table, but I want you to understand what a traditional buyer is looking for and what they're willing to pay. And I want you to understand what an investor is looking for and what they're willing to pay. Because if we're somewhere in the middle, we're probably going to have some longer days on market. So how do you feel about longer days on market? Or more importantly, if we price it on the high side and I bring you a cash offer, I don't want you to be insulted by that, right? This is the conversation. Now, if you are genuinely in a pocket, and we have these pockets here in California where those pockets, those neighborhoods are in such demand that the traditional buyer is willing to buy an average or below average conditioned home just so they can be in the neighborhood and they're going to figure out how to remodel it themselves. An investor can't compete with that buyer. But what I've been able to do with you, Jeremy, is I've been able to, in the psychology of negotiations, I've anchored you with some numbers, whether you like it or not, so that at some point down the road, if we are having hopefully a great conversation about, right, your home. Here's the other thing, guys, and I just want to say this again because I know I get all fired up about this stuff. If you're a listing agent and even if you have great comps, what's the probability? What are the chances you list a house for $500,000 and it actually closes at that exact same price? It hardly ever does, right? And so what I want you to realize is that our old school way of pricing homes, the traditional listing method, is there's no validity to the price because the buyer is going to set the tone of what the value of the price is, right? And what's cool about our cash offer program is if you really want to validate the value of this property based on what an investor looks at, then get a free cash offer. They don't have to accept it, but at least you know where the floor is. And at least you have some validity to an offer, whether the seller or you like it or not. That's the point we're trying to drive home is just get out of your traditional box a little bit, leverage the tools, the information, and pay attention to the direction that we're going. 33% of the residential home market is investor. So what's important to the investor? The numbers. And we got to get good at the numbers. And then we got to figure out how to start having real life conversations with property owners about, based on condition, location, some other things, what the value of their property is. So good question. All right. I am excited to introduce you to Peter Russell. He is from Velocity Advantage Capital. We are going to talk about some creative closing opportunities for you. You can call it a couple different things, but it's basically a double closing and transactional funding. And one of the reasons we've invited Peter is one, once I found out what Peter had to offer, it reminded me of when I started real estate in the 90s. I used to transact investor deals, but we called it double escrowing. So I didn't have an assignable contract, but I did have a contract with the seller for me to buy it. And then I had an investor who wanted to buy it for me with a separate contract. The difference was there was no real exchange of money from me. It was just the escrow company managing two contracts, right? And 1998 double escrowing became illegal in the country. So we weren't doing that. And what you see on the screen is something that has picked up a lot of momentum over the last 10 years in particular, maybe 12 years now. And that's real estate wholesaling. And I know when I teach this class, we talk a little bit about it. And I realize some of us are very familiar with wholesaling and some of us might be new to the wholesaling concept. But what I wanted to do is just explain this to you first before we give the floor to Peter. And that is wholesaling as a concept and a business practice. Predominantly, wholesaling is done by non-licensed real estate agents, even though there are licensed real estate agents that do practice wholesaling. But basically what I'm doing is have a very informal contract with a property owner, 1 page, 2 page, 3 page. And that property owner and myself are agreeing on a price. I am assigning that contract at the end of the day, right? So the seller understands I'm selling my home for $500,000. Now, as the wholesaler, I have a set floor on the price. And for me to make a profit, I'm going to go out of my way to try and find someone else who wants to buy the contract for me for a flat fee, right? So in this scenario, you can kind of see we're going from a contract A to a contract B, which is the wholesaler. And maybe that's $250,000. And I find another buyer who wants that property too, except there's no transaction happening. I'm just assigning one contract to another person, right? I'm assigning those rights to that contract over to another person, and I have some type of a fee built into that. That is what a typical wholesale transaction looks like. So for licensees, it can be a little tricky on a lot of different levels. I'm going to get into that in a second. But as a listing agent, if you're not familiar with the practice, some listing agents, we just kind of learn the hard way, or we get ourselves in a little bit of a pickle where we think we actually have a buyer for our seller's property and we don't. It's somebody else who's trying to reassign or resell the contract that I went under with, right? So there are some questionable practices that happen through this process, but basically this is what wholesaling is. And there are some risks that happen with wholesaling. As more and more wholesalers come into the market or have been coming into the market that don't practice good business standards or ethics, what typically happens in this country when more and more people start feeling harmed, right? We start getting regulation. We start remembering the last time I dealt with a wholesaler, right? And it starts to lose its glitter to a certain degree, right? So the idea of what's happening today is that entire market is under pressure. And because it's such big business, we're talking billions of dollars of money being made by wholesalers in this country. Um, we find creative ways around it, right? And so right now, what's happening is a lot of regulation is going on, and there are a lot of different states that are starting to change how they view the practice of wholesaling. Illinois was really the first to spearhead any legislative change. And basically, in a nutshell, in Illinois, if you transact two or more properties in the same year as a wholesaler, they require you to become a licensed agent. The irony is, you become a licensed agent. Now, does your broker allow the practice, or does the E&O insurance allow the practice of wholesaling, right? Because there are disclosures and there's a lot of things that we carry, right, as responsible licensees. There's fiduciary responsibility we have. So there's a lot of pressure that's been happening, and some of the more profitable wholesalers and influencers in this country have just gotten a little bit more creative. Some of it is called wholetailing. If you've never heard the term wholetailing, they're finding ways to, as an example, just go under contract with the property owner and actually close on it, even though they have another buyer. And it might take a couple days, it might even take a couple weeks or a couple months before they transact, but that's what they're doing. So why is that important? Because again, if you're running comps like we're teaching you, I found a flip. I can go to the tax record. I can figure out what that investor paid for it. I can figure out whether they got a hard money loan, right? What I can't see on the tax record is if the wholesaler assigned the contract. I can't see that. So the only way I see that a wholesaler was involved is if they wholetailed it, meaning they actually recorded on it and then recorded again with the next investor buyer. And you can see that gap and you can see how much money that they made. That's really the only other way to do it. And more importantly, what we're going to talk to you about today, and we do, and I appreciate your patience, Peter, is I want to introduce Mr. Peter Russell with Velocity Advantage. So everybody wave hi to Peter. Peter, you there?
Yeah. Yeah.
Please take a minute. I know you had to listen to me there rant for a little bit, but introduce yourself. Tell us a little bit about yourself, your background, and why you started Velocity Advantage.
Yeah, I appreciate it. What you were talking on earlier with ARV and everything like that, it's hits at home. I think with the shift in the market, usually the last people to accept it when it's a kind of a downshift are the actual sellers, the owners of the property. And I still have those conversations with people every single day because I still have a wholesaling operation. I started one 9 years ago now. I found out about wholesaling through a friend who started doing it, and I just kind of took it from there and ran with it. Built up a nice team here in Charlotte, North Carolina. That's where I'm based out of. Started out with just one business partner, one guy, and I just like putting signs out, knocking on doors, trying to figure it out. As we went, this was before all the gurus and teachers and everybody were out there. So you could learn a few things off of YouTube and kind of word of mouth through other people doing it. But we just kind of failed forward at it. And then over a few years, built up a pretty strong team. And then before you knew it, we were doing it virtually in some different states too. Dallas, Houston, Texas, Alabama, some deals in Florida, dabbled in some other markets as well. So I've had thousands and thousands and thousands of conversations with sellers, off-market sellers for the most part. We've done a few deals that were listed on market here or there, but majority of the over 600 transactions I've done in the last 9 years have been just direct to seller. And I've seen a lot of shifts in the market in that time. I know, 3 or 4 years ago, if you weren't making money in real estate, something was wrong, right?
Yeah,
Like you could take something and run with it and figure it out if you wholetailed it, if you double closed it, if you assigned it, if you whatever. So that's my background, is first and foremost with real estate is just on the wholesaling end. That was my entry. That's what I did and built it up. And we got to a point where we were doing about 25 deals a month, and had a big team here in Charlotte. And then about 2 years ago, stripped it all down, it was fun. We made a lot of money and had a good time doing it. But business partner and I decided he wanted to do something different. We'd kind of run our course with that. I wanted to keep wholesaling, but I really got into the transactional funding side of it. And I'll touch on that in a minute here, how that all kind of worked out. But that is my background. I work with agents. I work with everyone in the industry every single day. I love working with solid investor friendly real estate agents, because one of my strategies now, as the market changes, is to be able to give the seller the option to, I call it a concierge service, but to be able, some people in the industry call it innovation, where it's like, hey, I can give you a cash offer, right? And if you really want to work with that, let's run with it. I'm confident in that sort of thing. Or if you have a little bit more time and would really like to try to max out what you make, even though the home needs quite a bit of work, that sort of thing, we can do a hybrid of the traditional route / investor route, where we sign an agreement and I'm able to put it on the market. And I say, I will net you this. So maybe I can offer somebody 190,000 on a house, and I'm confident that I can wholesale that and make a $30,000-$40,000 profit. But I can also say, I can offer you, instead of 190, if you let me market it and put it out to people, I'll let you net 210. Right.
So, yeah. So Pete, let me ask you just a couple of quick questions, if you don't mind. So one of the things I encourage our agents to do when they meet people, it can be a buyer, seller, doesn't really matter. I usually ask one of the first questions I ask, and if you don't mind playing with me, I'll ask you the same question. Tell me one thing you love and one thing you hate about real estate agents.
Which one do you want me to lead with?
It doesn't matter.
I will say it's not agents in particular, but we'll pick on agents right now.
Okay.
I hate when people do not communicate. I will cut someone out in a heartbeat if they will not communicate.
Okay.
So my biggest thing is communication. And with the agents that I like to work with, is they will, and I'm not saying that I bother them at 11 o'clock at night, or they're texting me at like 6:30. Like, there's boundaries, right? 100% understand that.
Yeah.
But when someone works with you and they just don't get back to you, or it's something very important and they're like, I thought I talked to you about that, but I wasn't sure, did I or did I not? And I'm like, no, you definitely didn't. Right. So communication for me is the biggest thing. What I love working with agents on is they can open up that property to so many other people, right? Like I was talking about, like if we go that route and we list it and they're a strong communicator and whatnot, I've gone from making 25, 30K on a property to 50, 60K because we were able to list it. And we just opened it up to that many more investors. Like, I've been doing this for 9 going on 10 years in Charlotte. I don't know all the buyers that are here. People enter, exit the market all the time. So I feel the strongest when I can list that. So being able to work with a strong agent that understands that, and they're not just focused on the retail side, but they're investor friendly. They can walk the walk, talk the talk, we're an attorney state. So work with the attorney and their team, the closing attorney, that sort of thing. I will try to work with them all day long.
And they have to understand ARV.
Yeah, 1,000%. Actually, to that point, I've had agents check me before, right? And be like, hey, I know you want to list it for this. You think we can get that, but realistically, we can't because of, and then they'll pull up legit comps like you were talking about. Obviously, with the houses, 95% of the time that I'm working with, it's nothing close to a new build.
Right.
So a smart agent will be like, there's no way you can use a house built within the last 5 years to be a legit comp. And I've had the reverse side of it too, where an agent said, I think we can get a little more out of this, which I always love to hear, and it ended up working out. So someone that knows their numbers, knows comps, knows ARV, and is up to date with what's going on in the market, is worth their weight in gold for an investor or somebody like me to work with.
I appreciate that. So the second part of the question. So for me, my life, my business has been a licensed real estate agent. Mm-hmm. And the only world that I've been used to working in, especially early on, is the MLS. And it wasn't until really 2015, 2016, when our business was really taking off. I started working with a few more wholesalers as an example. And where I'm ultimately going with this, Peter, is a I'm completely surprised at the amount of off-market transactions that happen.
Mhm.
So in your perspective, in your history, could you just share with the audience real quick, two perspectives? One, do you see the trend of off-market continuing? And then two, your opinion real quick on why do you think homeowners choose to go the off-market route more frequently today than ever before?
Sure. Yeah, I think it's trending that way just because of technology,
Okay.
just like everything else. Like 10 years ago, you thought it'd been so weird to text someone and have them come pick you up in their random car, right? Yeah, everyone took a cab or they had their family or friend take them to the airport, whatever. Now it's Uber, Lyft. Now they have autonomous cars that are picking people up in certain cities. So with technology and with people having access to more information, and I know Redfin, Zillow, and all those aren't always the most accurate, but that's what almost all the homeowners that I talk to go by. So with just being able to click something or pull it up on your phone or look at it on an app, people feel a little more empowered in that it takes down that barrier of maybe I need somebody to help me with this. I'm not saying that's for better or for worse, because an agent's not just going to price a house out for you. There's a lot more involved. But I do see it more with people just having access to technology, being able to maybe run their own comps and look into it and say, this is what's going on in the neighborhood. They don't have to have access to MLS, right? Those
Yeah.
third party sites are pulling all their data a lot of times from tax records and everything. So I think is technology and advances and people have just more access to what's going on, especially around them if they're going to list their house, that sort of thing, or if they're moving somewhere and they're like, I kind of like this area, let me look into it. I think more off market transactions will take place. And I think it's probably not too far off, just because people are realizing what's available and what's out there. And I think the biggest piece that agents can really provide value in is saying, I can actually help you with the process on throughout the transaction with attorneys, with title companies, because that is the most intimidating factor that I've come across in doing this for years and years is people usually have a general idea of what their house is worth, even if it needs a bunch of work, but they don't want to go through all the steps, and they don't know what it takes to get a deal closed. They are so intimidated by that closing process or what their options are, and they think everything has to fit into this nice, neat box, be super black and white. So if you can be an agent that is a little bit outside of the box or that is investor friendly, I think that's going to be a huge advantage moving forward.
Love it. Love it. I appreciate you sharing that. It's that's what we encourage. We encourage that we understand other people's viewpoints and perspectives, because I think that will ultimately make us better real estate professionals, is understanding right where we're needed and how we can provide that value. So really appreciate that perspective. So I know we need to get into this, which is double closing. So I'm going to let you kind of take it away. I know you're kind of seeing this slide for the first time, but some of this I know you're very familiar with. So, Peter, tell us what's a double closing, and then we'll kind of work our way into why that might be really good for our real estate agents.
Sure. So, like you talked about before, a huge portion of people are investors doing stuff off market where they're reaching out to sellers directly, right? Like I spend probably $25,000 a month right now, even though I'm much smaller than I was before, in marketing. If it's mailers, if it's PPC online, if it's, there's 10 different ways you can reach out to a seller.
Right.
And you pull a list, you try to see who people might be that might be motivated and wanting to sell, and you're reaching out to them. So there's investors all over the country. There's probably thousands of closings happening in a day nationwide, where someone's going direct to a seller and saying, hey, I'm interested in buying your property. And then that seller says, let's talk, right? For one of whatever many reasons they might want to sell for. So these investors, we'll just call them wholesalers, as well as they don't want to buy it and hold on to the property as a rental. They don't want to buy it, fix and flip and do that. You're really just acting as somebody that is sourcing properties for cash buyers. I think the easiest thing to think for anyone that doesn't know what wholesaling is you're the middleman. Like, you are the marketing piece and you are going and finding these deals, because flippers, rehabbers, buy and hold, portfolio type investors, they're usually not that good at marketing, right? Like if they have a property that they need to go in and flip, they have the crews, they have everything, they know what they're doing. They just don't have a marketing arm to their business. So a good wholesaler is someone that can go out and just get in front of as many off-market sellers as possible and have conversations about getting working with them on it. So as a wholesaler, you get a deal under contract, and you have to get it under contract at a good enough price where you can turn around and sell it. You can either assign it over or you can double close, which we'll touch on, but you can sell it to an investor buyer that's going to then take it and then add value to it. So these are usually properties that need some work. You know, some of them need to be knocked down and a new builder is going to go in there and build something. Some of them need, you know, $20,000, $30,000, $40,000 worth of work. And every once in a while, it could be in pretty good condition, you know, only need $5,000, $10,000 worth of work. But the seller's like, I don't want to go to the traditional route. I don't want a bunch of people in my house. I don't want my family to know that I'm selling it, because if I list it, it's going to go online. Or they're like, I need to sell this thing in 2 weeks because I just got a job and I can't focus on it, right? Could be a litany of reasons.
Right.
So you get the property locked up, and we'll use the numbers on the screen here for simple math. You, as the investor wholesaler, get a property locked up for $250K with your seller, and you put it out there and you say, I think I can make at least $10,000 on this. I think somebody will buy it off of me for $260 because maybe it's worth $475 once it's fixed up and it needs, you know, $30,000 worth of work, that sort of thing. So you get a contract with your seller, you get a contract with your in buyer, and then you take it to closing. The traditional route of wholesaling is you assign it over to that cash buyer, that in buyer. And on the closing settlement statement, you as the wholesaler, either under your name or your company name, gets a $10,000 assignment fee. And you're like, cool, on to the next one.
Right.
Where double closing comes in is there's two main reasons. And you touched on one earlier, is there's a lot of regulation going on around now. Even in my state of North Carolina, there's something on the docket. It's actually like super aggressive, and hopefully they're going to adjust some of it, because the wording is so strong. They have it right now where almost nobody can do a transaction, even if you're a real estate agent. So
wow.
Yeah, it's got to be cleaned up, and they're working on it and everything too. But there's been a lot of legislation that's come down the pipeline because wholesaling is such a low barrier of entry. You don't have to be licensed. You don't have to be regulated. I lean more toward on having like guidelines in place for what you can and can't do. Because if not, then it just leaves it open for bad situations. There's been wholesalers that just leave the seller hanging. They tie up the property. They never intend on bringing another buyer to the property. They tie it up for way too much, and then they disappear. So with legislation and everything coming down, hopefully it cleans up a lot of that, but still allows for it to happen. So off-market deals can still work. But you can't do assignments in some states anymore. Or like you said, you're limited to, under this one LLC, you can only do two, right? Or you have to be a licensed agent or whatever the regulations may be. So there's legislation that holds people up from not being able to do assignments. Assignments may eventually just completely go away. And then the other thing is too, let's say you have a property under contract for 250, but you have a killer deal, right? Like let's say that you can actually assign or sell that to somebody for 350 and you're going to make $100,000. If you want to protect that and not have that blow up on you, if you don't want your in buyer, because a lot of times when you assign that contract over, you have to show them the full contract, what you have in under what your price is with the seller and all that. The moment your in buyer sees that you're making six figures on a deal, there's a lot of buyers, no matter what they tell you, they're going to come back and be like, oh, I didn't notice that we have, the foundation's cracked, or there's some mold in the crawl space that none of us ever went under. Like they're going to find reasons to retrade that on you. So if you want to not be holding your breath on the day of closing, hoping everything works out, or if you're in a state where it's regulated, what you can do now instead of assigning is you can double close it. You can get everything lined up, and on the day of closing, with your title company, attorney company, wherever you're at, you have the possibility and the power to be able to buy it and then turn around and sell it to your end buyer on the same day. Just all the documents, everything are lined up, everybody signs, the end buyer puts their money in escrow, it's sitting there, they're fully committed, but you're going to need the capital to buy it for 250 and then turn around and sell it to them for 260, 300, 350, whatever your spread is on it. And that's where we step in, is being a double closing company, is saying, hey, not a lot of people have $250,000 just sitting around for a closing. We will be the one that funds it for you. And we'll charge, on most of our deals, we actually charge less than 1% because it's just a same day simple transaction. So I came across this, the first 5 years I had a wholesaling company. We did all assignments. We never did a double closing, didn't really know about it, hadn't heard about it. And then they started popping up a little bit because of regulation, or because of bigger fees, or because if you were selling to like an Open Door, OfferPad, somebody like that a few years ago, they wouldn't let you do an assignment. But there was nobody handling it well. There's no lender, no funder, or they'd charge you 3 or 4 points, or they'd kind of leave you hanging, or it was a different process every single closing. And you're like, we didn't have to fill out all this paperwork before, what's going on? So it was just kind of a light bulb moment where I was like, man, I could make this way more streamlined, way more investor friendly from one wholesaler to another. And I can make it where people are taking as much of their profit as possible, where they're not getting gouged out of being able to make a deal work, right? Because if you charge 3 or 4 points on $250,000 and you're only making a $10,000 spread, that's almost taking you down to zero pretty quick.
Right.
So put it together about 2 years ago and started doing it here locally. And then within the last 18 months, we provide the double close funding. They call it transactional funding. We've been doing it nationwide, and to date, we're at 225 closings. And just every week, every month, we get more and more requests for it. I think it's getting pretty popular nationwide to double close, so you don't worry about anybody seeing your profit. You're in a regulated market. You have to do it. So it's becoming more and more of a necessity. And that's why it's just like the increase in demand and requests and everything is just continues to grow.
Yeah. And I think that there's a continuing trend, right? So as an experienced agent, especially with working with my own clients, whether it's on market or off market, right? I have this sense of responsibility to make sure that I'm protecting them, right? And the challenge with wholesaling is, I know that if I go under contract with a wholesaler, or my client goes under contract with a wholesaler, I'm at the mercy of their database. I'm at the mercy of, I don't know how much padding they're putting on it, and does it make it not affordable for the next buyer? There's always the liability and the risk that can kind of come with some of that stuff. But to your point earlier, Peter, the biggest challenge, especially, is with a property owner who is under the impression they have a buyer for their property that can close quickly to solve their problem, when the reality is they don't really have a buyer yet, right? Mm-hmm. And in this scenario, what I could do is say, Mr. and Mrs. Homeowner, now that I know what your bottom line is in that $300,000 price, if I close at $300,000 and this is your net, you're happy, then let's just create that contract and we don't have to worry about anything. And then if I have another buyer, right, and I know that I've got another client that would buy this property, and I already know the math, meaning I already have a good idea because I work with 100 other investors what they would pay for this property. So I'm going to go under contract with you for $300,000, and I got John Mora, right, who's someone who flips, and I know he'll pay $320 for it. And I know that's just a number that we're talking about. In this scenario, what it sounds like, Peter, is I can keep my contract with you. I can close at $300,000 with you. And at the same time, John can close on the same property the same day, and I get to keep my 20 grand. Right?
Yeah, correct. Yep. It's 2 separate contracts. So you are the actual buyer with the seller, and then you are the actual seller when you're selling it to John.
Right.
So it's just streamlined. It's just way more just transparent, just simple for everybody involved. Because if not, you're doing an assignment And then that seller could say, well, you're not buying the property, Brandon. Like I see on the settlement statement, this is John. Who's that? What's going on? Right. Or John could say, hey, Brandon, like it's a good deal, but I see that you're making 25K on it. How about I give you 5K less? Right. I'll get you on the next one. Like this is stuff that I've literally had happen to me before. Where deals blew up at the closing table. I've got a conference call at a closing table with the attorney before, and they're like, the seller is not going to sell now because they're looking at the assignment fee, even though I prep everybody I work with that I will either buy it or I'm bringing an in buyer to the table or a partner or whatever it may be. The moment somebody starts counting what you're making as the middle guy, that's when it can become an issue. So to alleviate that, to get everybody happy and just on the same page, you control the process way more if you're able to double close it.
Right. All right. Very cool. So, so the idea is we have to have 2 contracts in place, right? We have to be on the same page with the title company or the closing company or the escrow company that 2 transactions on the same property are going to fund and close, right? So the stars have to be aligned, right? Contingencies have to be removed. All of the disclosures have to be done. Like this has to be ready to close. Where in the wholesale world, none of those transactional components are actually happening, right?
Yeah.
So we have to be a little bit more advanced in where we are in the process with we're going to do a double close, right? Or some type of a transactional funding. So
yeah, double close. I mean, it's only, that it's happening, well before the closing date. You've got everything lined up. You've got your in buyer, you've got title pulled, everything's lined up, good to go. And that's the only way that we'll fund it too, is on the day of closing, once everybody has to sign the settlement statements. And then again, that in buyer's funds have to be in escrow, just to know that they're not going to back out or anything like that. And then once that's all lined up, we'll send our wire directly to title. They'll fund and close the first one. Almost everything digitally records now, so they get it confirmation within 30 minutes or an hour. And as soon as that confirmation happens, they'll turn around and close the second one. And then that records. And then, the whole process usually takes maybe 3 to 4 hours, and then everything's done. Sometimes it's quicker than that, but for closings to happen, record. And then when the second one closes and records, just funds go out. Like your money as the wholesaler goes to you. Our funds come back to us along with our fee. And the in buyer has their property. So everything lines up and just happens pretty consecutively. On average, our money's out for about 4 hours that day.
Yeah. And we're going to get into the cost and stuff here towards the end, you guys, just FYI. We want you to understand the process and how it works more than anything. Garland, real quick. I think you're muted. Oh, maybe you're not. Oh,
yeah, well, yeah, I mean, you just said you were going to get into the costs and stuff.
Okay.
But I do have an initial question. So you're saying that the initial buyer it's going to be recorded in their name as well. So they're gonna record the first one and then record the second one. So you're gonna have 2 owners in a day recorded.
Yep. You as the wholesaler are going to own it for about 2 hours, and then the end buyer is going to own it by the end of the day. So it's legit. I mean, it closes, records in your name using our funds. And then as soon as the second deal closes and records, because you can't do a simultaneous, someone's got to own it and then you turn around and sell it. So yeah, there will be 2 owners on the same day. Like if anybody goes back through and looks through the paperwork, documents, anything like that, it'll show that you owned it for that day and then somebody else bought it from you.
Okay.
So when you live in the real estate agent world, right, my head always goes to my business practice. So Peter, I want to, whether we go on market to sell your property or not, I know 10 other investors who can bring you a cash offer, right? And in that scenario, I have to make a living too. So at some point, someone's got to pay me compensation, right? And so if you guys are thinking about this with your real estate agent hat on, what we're talking about is you're still in the middle and you're in the mix and you're a party to the contract because you want some compensation, right? So let's just say it's a $500,000 property and you're okay with a 2% fee. So now you got $10,000 there somewhere that somebody's got to pay. The question becomes, and Peter, this is what I'm going to ask you. I could still be a licensed agent. And instead of saying, hey, I'm going to bring you a buyer for $500,000, Amanda, and you got to pay me $10,000 in compensation. What I really could do is just say, hey, Amanda, I'm going to buy your property for $490,000, right? And you don't have to worry about paying any compensation. And then I have my 10 other investors who are willing to pay $500,000 or more. So technically I can craft that transaction just the way I described and leave my licensing completely out of it, correct?
Yeah. I mean, that's what you do as a wholesaler. You say,
Right.
let's agree on a number that we're going to net you on. You don't have to pay, as the seller, you don't have to pay closing costs. You don't have to pay agent fees, anything like that, right? This is an off-market deal. The buyer understands that it's going to be as is.
Yep.
And they'll be flexible with the closing date. You know, if it's time of the essence, we'll get it done as soon as possible. If you still need to move stuff out, once you know that somebody's going to buy it, you need some time, we'll bring that to the table and make sure that's the fit. But yeah, I mean, that in that case, you kind of take off that hat and you just say, because it's super attractive to a seller when you're like, I can get this done if we can agree on a price where that's what you're going to net. And you don't worry about fees, you don't worry about commission, anything like that. Like that'll all be handled and taken care of by someone else. Like, let's work on a number. Let's figure out a number that works for you, that's fair, that's actually going to make this like going to work at this property. And let's go and get that number for you.
Right. And in that scenario, I'm not disclosing what I'm making. Whereas if I'm padding any of the deal with compensation for myself, it has to be disclosed somewhere on a settlement sheet. Whereas in the dual transaction, right, or the double closing, this is what the seller's getting, and here's that settlement sheet, and then this is what the buyer's getting, and that's what the settlement sheet is, and they don't see the difference, right?
Exactly. No, it's one of my tag phrases and lines is protect your profit. Like as the investor wholesaler, like protect that profit. Because again, you can spend a lot of money in marketing. You can spend a lot of time, energy, effort. It's not just an overnight thing.
Right.
So you're going to take that money. You're not just taking it and running into Vegas and doing whatever. If you're a good entrepreneur, business person, you're going to take it, put it back in your business, pay your bills, that sort of thing. So you want to make some solid profits on it. But yeah,
right.
it removes all the guesswork, and it removes, because again, people can agree to things all day long, but if you end up getting a really good fee on it, in either the seller sees it, or a lot of times for me, it's the end buyer, honestly. Like I can work with sellers all day long and be like, hey, we're getting you what we agreed on. Like, this is a good deal. You don't have to fix anything up, whatever. And they're like, okay, yeah, I understand. But that buyer is usually the one that I'm most worried about, because if they don't get you on this one, they'll try to get you on the other one. Like I said, I've had them come back before, made a $60,000 fee on it, and then they wanted to buy another property off me 2 months later, and they're like, hey man, I saw what you made on the last one, why don't you cut me a deal?
Right.
And my response to that is, as soon as you buy this thing and flip it, are you going to try to negotiate with who your end buyer, your conventional buyer is, or are you going to try to make as much money as possible so you can put it into your business?
Right.
So in order to alleviate people from counting your check or from counting what you're making, this is the easiest way to make all that disappear.
Yep. Gotcha. All right. Help us understand your fee structure real quick, and then we'll do some Q&A.
Sure. So everything that we charge is based off how much money you need to close that deal between you and the seller. Majority of investors, wholesalers, their pitch to the seller is, I will give you $200,000 for this property, and I'll also cover your closing cost, right? So let's say the closing cost is another $3,000. So on the day of closing, on that settlement statement, cash to close isn't going to say 200,000. It's going to say 203,000, whatever that ends up being. So we base our fee off on whatever that amount is that you need cash to close. So our fee structure there is any deals that we fund that are 135K or less, we just charge a flat fee, because we do have people that send us small houses in like Alabama, or random land in like a town in Michigan, right? That's 30, 40, $50,000. So we get small requests all the time. And we just say, hey, we're going to put in the same amount of work. We're going to make sure that it gets taken care of and the money's there for you. But we're just going to charge a flat fee on that. So any deals $135,000 or less, our flat fee is $1,250. You're not paying that up front. You're not paying anything out of pocket. That comes back to us when that second deal closes and funds disperse. Title will send us back our fee and the amount that we put in there. So I do get that question a lot. A lot of people say, hey, do I need to bring any money to closing, or what's the underwriting process? Or like, do you have to check my credit score? And it's like, no. Like, we will fund the deal if on the day of closing, everybody signs and the end buyer performs. So then the next tier, and this is where 90% of our deals fall into, is that 135K to 500K. Our average nationwide right now is a little over 225,000 on what we fund. So a little less than $250,000, but between 135,000 and 500,000, we actually charge less than 1%. It's 0.75, so it's 3/4 of a point. And then we have an admin fee on every deal. It's kind of hard to see here because of the font and whatever. So we have an admin fee of $250. So if you bring me a deal and say, hey, I need $200,000 cash to close on this, we would say, cool, we can definitely fund it. Our fee on that would actually be right about $1,700. So it's still less than 1%.
Right.
We do bigger deals. We do get bigger requests, especially West Coast, that sort of thing. Numbers are always higher over there. We do some Northeastern deals too. Our deals in the Northeast, we do it nationwide, but in those markets, it's usually bigger. So if you have a deal that's between 500K and $1 million, same process, same everything. We're just putting out a little bit more capital. So we bump up our fee to 1%. And then a few times a quarter, we get some guys that have like a commercial deal, big land deal, portfolio deal, whatever it may be, and they need to double close. Anything over between $1 million and $2 million is 1.5 points. And then anything $2 million plus, we just charge 2%. So we had a guy in Arkansas back in February or March. He had a RV park under contract for 2.2 or 2.3 million. And he had a buyer for $3 million. So he's going to make $700,000-800,000. There is no way in hell he was going to risk doing an assignment on that, because he's like, this buyer is going to see that and be like, oh, like I can easily shave 100-200K off my offer, and he's still, the wholesaler's still going to make good money. So he came to us and we funded it for him and double closed, and he was super excited about it. Other people were quoting him at like 3-4 points, and we're like, no, we'll do it for 2 points. So.
And if he was a licensed agent, he didn't want to pay the split.
No, yeah. If he was at 50%, or even if he was less than that, it's still. Yeah. So there are, it's a huge marketplace for it. And like I said, it's growing more and more, but there's people that do single family deals and smaller deals, but there are guys out there that just go for multifamily portfolio deals, commercial. And they're like, hey, I'll do 3 or 4 deals a year and make way more than I did if I would do 100 single family deals. Right.
Yeah.
So there are people that come to us for bigger stuff too, and we can handle that.
Awesome. Garland, real quick.
So you have to have both contracts done, right, before we come to you?
Yeah, we do ask that you have a contract with an end buyer. It can be weeks out, it can be months out before you close.
Yeah.
But for us, we've just got to the point where we're so busy where we want to have somebody that has it already contracted with a buyer. And as soon as you do that, you can send it over and we'll get working on it. You
don't happen to do pre-approvals, do you?
As far as like proof of funds?
Yeah.
Yeah, we do those. I actually, I'll drop a link here in the message board, and it's a form very similar to our request form. You just click on it, put in the information, and give us about 24 hours, and we get it back for you. We like sending those out with the idea of like, hey, if they get it locked up and they need to double close, like, I hope they work with us, kind of thing.
Man, that's awesome.
Sure.
So we had a couple questions that were kind of delivered earlier to me. What deals are ideal for a double closing, Peter? What is?
I would say, I mean, if you're in a market where you have to do it, you have to do it. It's ideal, right? But it's an off-market deal, direct to seller, where you're the middleman and you have an end buyer, and you need to protect that profit. If you're in a market where you can't do an assignment, then you have to double close. If you're in a market where you can do assignments, but somebody in the transaction's giving you the ick feeling, if they see anything about the assignment, then they're going to make an issue out of it, then I would say double close it. If you're making, some people set a threshold, like some investors that I fund their deals, they say any deal I'm going to make over $20,000, I'm going to double close it so I don't have to deal with the end buyer changing numbers or anything like that. So it's kind of case by case. For me, I double close everything, and I have been for the last few years, just because it's super straightforward. There's no room for risk in the sense of somebody seeing it, blowing the deal up. And it just, to me, it just makes you seem more legit as that investor, because you're actually on the paperwork, you're actually buying it, that sort of thing. So it gives you comfort with your seller, comfort with your end buyer.
Okay.
So there's different reasons, but I would say mainly if you have to now, which more and more you're going to have to in every market. And then if you're making a profit of a certain amount or higher, and you're just like, I want to protect this thing, I don't want it to blow up on me, I think that's the time to double close.
Awesome. What are some common title issues to avoid?
As far as, what do you mean by that?
Right. So for a real estate agent, our mindset is a transaction, right? We go under contract. There's a deposit. There are inspections. There's disclosures. There's a preliminary title report. Maybe there's a city report. Right. So we're in our mind, we're going through all of those things, and then every once in a while, you're ready to close. And if they're not getting a loan, is there a title? Is there something on title that's a hang up, right? Or more importantly, if it's a double close, what stars need to align with the title company? Is it better to use the same title company? Like, those are the kind of questions.
Oh, okay. Gotcha. Yeah, definitely. If it's at one title company, it's way more streamlined and straightforward. We will do two different title companies. But that, again, we will only fund it if it's same day. So those two title companies have to be in communication with each other. I think sometimes people think, oh, if I use two different title companies, then nobody has to know it's a double close, right? But then if they're not in communication with each other, it's most likely not going to fund and happen on the same day. And then unfortunately, at that point, we won't fund it.
Okay.
So one title company is good. And then investor friendly title company that's done a double close or two before, or they do them all the time. The more familiar they are with it, the easier they're going to be about the whole process. If they haven't done one before, they're going to cause more issues than need be probably with it, or they're just not sure what's needed and what all needs to happen. And they're going to probably make you go through more paperwork and do whatever. So investor friendly, and try to keep it to one closing company.
All right. One more quick question, because I know we're a little past our time, but if I am, let's just pretend I'm going to be the buyer and I've agreed to a price to buy your property from you, and I know that I'm selling it to somebody else and I'm going to do a double closing. What is, should I still go through the process of getting inspections done and getting to that place, but that I know that the next buyer is completely aware of the property they're buying, so that I'm not dealing with retrades or renegotiating or cancellations? So how thorough are you if you're the first leg, you're the A to B side of this?
Mm-hmm. So as the wholesaler, right?
Mm-hmm.
Yeah. So the way that I approach it is, I always myself or someone else go out to the property on my team, walk it, take photos, ask questions, try to get as much info as possible. And then when we market it and put it out there for our end buyers, we put it all on there. So it's being as transparent as possible and letting them know what's going on. I don't get appraisals. I don't do surveys or anything like that. That to me is the end buyer. If they're serious enough and they're interested, like that's kind of on them. Because you get 20 end buyer clients out to the property, and you're going to get 20 different opinions on how much it's worth or how much work it needs. But I also know that the more info you can give them with pictures, video, background on the property, you even throw comps in there when you're blasting it out, that sort of thing. The more transparent you are, the easier job you make it for them. And then it shows you credibility as the wholesaler that, oh, this guy actually knows what he's talking about.
Right.
You know, the ARV is 600,000, not 750,000, right? And it does need about 40, 50K worth of work. But I just try to get as much info as possible, lay it out there, build a case for why it's a good deal, and then kind of leave it up to that end buyer. But once it's under contract with that end buyer, usually there is a due diligence period. They know they're buying it as is, but I'm going to, get them into the property with their contractor. I'm going to let them run their course on it. If not, then they're going to be uncomfortable with it. They're going to back out on it. So yeah, I think is that middleman, the best thing to do is just be transparent, put it out there, be confident in the product that you're giving them, because if it's a good deal, again, that's the hardest thing for the end buyers to do a lot of time is find the next deal, right? They're ready to go. They're not that good at marketing, or they don't have a team. And if you want to be really good at it, you have to be intentionally like going out and talking to people, marketing to them every single day to find these properties off market.
Right. Cool. All right. Well, any other questions for Peter while we have him on the call? Anybody?
Question.
Okay.
What's the top 3 situations or motivations for a seller that you've come across, Pete, over the years that you generally can find people in categories to go ahead and sell at that wholesale price?
I would say tax default. They owe just a bunch of money on taxes, and I would lump in HOA stuff. I'm working with somebody right now that owes $90,000 in HOA fines and fees. I don't know. I've never heard of a number like that before, and it's not like in an amazing like country club neighborhood where they're like tearing him up on it. And he hasn't even lived there for 10 years. So I'm like, what are you doing every weekend to get $90,000 worth of fees? So if somebody being tax delinquent or delinquent on fees, tired landlords is a huge list. People that are just like, I bought this thing 15 years ago. I thought it was going to be a cash cow. And now I get calls in the middle of the night to unclog a toilet because they never got somebody to manage it for them, right? Like they don't really know what they're doing as a property owner. And then I would say another one in there would just be out of state owner. Somebody that bought it. I live in Charlotte. I talk to people all the time that are like, hey, I live in Chicago now, or I moved to California for a job 8 years ago. And I just don't, it kind of ties into the tired landlord thing, but they're like, I have no reason. I'm never going to go back. I thought I was going to live in Charlotte, blah, blah, blah. And now I want to be done with it. I haven't even stepped foot in the property since I left. So it could be a nightmare. It could be great. Can you work with me on it? A lot of times with that, you end up being their eyes and ears because nobody else will go check on it for them. So you're like, hey, if you can get me in there and I'll go check it out, like, let me let you know what's going on. I'll send you pictures and then we'll try to come to agreement on price. So I think those are like the biggest ones, is just like, and we do pre-foreclosure, we do probate deals, all sorts of stuff like that. But tired landlord, if you have a tired landlord that is also maybe behind or has some HOA fees or whatever, like that, you are stepping in. And like, I've had so many people at the end of those deals just like refer me to other people or leave me like the best testimonials ever, because everyone thinks that they have to go the traditional route, right? And they're like, I don't know any realtors. I don't want to clean. They think they're going to have to fix it up, make it perfect, list it. They don't want to spend $20,000 on their property to make it presentable, right? And especially if they're behind on any sort of payment or anything like that, they're like, I'm not putting any more money into this house. So, but I think those would probably be off the top of my head is top 3. If I get a call or my lead manager tells me we got somebody on the line that, is out of state, they've owned it, they have equity in it, they've owned it for 15, 20 years. And also they say they need to sell it tomorrow. Like I'll have somebody drive out to that house like that day and go figure out how we can work with them.
Right on. Last thing, what's the best way for a real estate agent to kind of present this concept? What kind of what kind of frame of mind should they have? What, should they look at themselves as I'm the investor? Maybe I'm going to go door knocking instead of trying to get listings. I'm going to go door knock and find someone who's motivated to sell, and maybe I'm going to buy it myself and I can double close it. Is that kind of more of the mindset, you think?
Yeah, I think anybody who's an agent and they're not working with investors or they're trying to find properties on their own is missing out on massive, massive potential. Because like you said earlier, as an agent, you really have almost, I know it's not supposed to be set or fixed, but you have kind of a set price point of what you can make on a property. Even if you bring the most value ever, you're kind of limited to that, right? But if you look at it as if you walk a property, if it comes to you one way or the other, if you knock on a door, if a family member or a friend or a church member is like, hey, this guy, you're in real estate, right? Like my grandma needs to sell her house. She's 92. She's going to come move in with us. It looks like the 1950s in there. What would you do? I would go over there and be like, look, like I can approach this two ways. I can actually buy it myself or bring an off-market investor in here and make something work, or we could go the traditional route and try to fix it up and then list it. 9 times out of 10, that person's going to be like, tell me about that other option where we can just sell it as is, right? So you kind of put that hat on as it's an investor, but it's a problem solver. Like at the end of the day, that's all I am. And that's what I get paid for on both sides of it, for wholesaling and for the transactional funding. I'm just solving a problem, solving a need. So if you're like, hey, I think I can solve your problem better, and then at the same time you can make more money on it, it's a win-win. So I would try to approach it that way of like, hey, if the numbers make sense on this and I can help them out with their situation, like I could probably make a lot more on it as that wholesaler investor than I could as an agent.
Right. And sometimes it's not even the problem solving as much as it's just convenient for the seller.
1,000%.
Right.
I have so many people tell me all the time when we're signing the document to the agreement that they're like, I know I could get more for it, but I just don't want to deal with this anymore. Like they know, that's the hardest thing to have an answer to. I'm just kind of like, yeah, we're happy to work with you. Right. Like, what do I say to that? But at the end of the day, they know. It's just like if you had a cool motorcycle and you're like, man, if I put 10K more into this, I could probably sell it for double, but I got a wife, kids, whatever, or I got 3 more in the garage. I'm never going to use this thing again. I just need to get rid of it. Right. So it's that concept in that theory, but you're stepping in saying, I can help you out with this situation.
Right. Perfect. All right, Garland, last question. We got to go.
All right. Any tips on finding off-market properties without having to spend $25,000 a month?
Yeah, I mean, the easiest one is to drive for dollars. Just drive around and look for something that just looks abandoned, and not just because it has weeds in the yard or not because it has broken windows, because people live in some tough situations regardless. And if there's cars, if there's activity, if there's movement, but driving for dollars is pretty much free. I used to put out the signs, people call them bandit signs. Like I used to do that in the morning before work. It's not fun, but it costs a little bit, but that's how I got my first few deals. Right. Like there's so many times where I'm like, there's no way in hell anybody's ever going to call me on something like that. Like I see that stuff on the road all the time. Right. But now when I see it, I just kind of smile and smirk, and I'm like, people probably laugh at that, but people call those things. Right. So those are like easy entry ones. You can go down to like your certain times you can go down to like your county and look up like pre-foreclosure. You just have to go there and ask for the book and do that. So there's multiple different ways. You don't have to spend 25K on it, obviously, but you can pull, I mean, there's so many people online.
Well, I think maybe the question, Peter, might be, is there a specific hook that property owners are more interested in than the other, like cash offer? Like what is there a specific thing that might be more attractive for someone to pick up the phone? Because that's basically what a bandit sign is, right? We buy ugly houses, we pay cash, whatever. So is that predominantly how you approach it?
When I started out, it was, and now honestly that most of my stuff is inbound because I'm sending mailers and things like that. and the inbound call will talk to a lead manager. They'll filter it a little bit to make sure somebody doesn't want $1 million for a $200,000 property. As soon as I get on a call with someone, I just say, hey, we had a conversation. It seems like you're interested in selling the house. Before going through like a long list of asking them questions on age of roof and all that stuff, I just say, hey, can you catch me up to speed and let me know what's going on? And then I just shut up. Like the more they talk, the better. Right.
Yeah.
So just be a good listener, have a conversation, and you don't have to have an answer for them on the phone. Back in the day, I used to be like, oh, we can help you with that. Or, oh, I got you. Or, oh, sometimes almost even argue with people if they were asking for too much. Now I'm just agreeable. I just listen to them and I let them tell me everything. And then when I go to a property, because a lot of times that our initial offer is higher than what we can really do. Because once we get out there, we're like, hey, you weren't telling the truth. Like this place needs like 70,000, not 20,000. I just walk the property with them and I let them show me everything. 9 times out of 10, they'll be like, yeah, that could be replaced. Yeah, that really needs fixed. Yeah, it works. My AC works, but it's on its last leg. And then by the time we get down to price again, like that price is drop. So just have a conversation, be a good listener, and try to be a problem solver. And a lot of times at the end of the conversation, they will come to the realization in their own head that like, hey, I probably got to sell it for less than what I originally told you.
Right. Yep. Yeah. Appreciate that. Very cool. All right. Well, Mr. Russell, man, I can't thank you enough for joining our mastermind and sharing your wisdom and your experience with us. And more importantly, the opportunity that we have leveraging velocity, I think is amazing. Obviously, you and I have spoken already separately, so I'm looking forward to trying to figure out how we can do a couple deals together. So I'm excited about that personally. And I think everybody has your name and contact information. Hopefully some folks from here get the call. I also want to let you know that this is recorded and we usually end up, we have over 600 people that are kind of in our group. And so they'll ultimately watch the recordings and they might have questions and stuff as well. I'll let Garland, if you have his information, they do have a referral fee program, but I'll let Pete send you that one sheet so that you have information on that as well. So
great.
All right.
Thank you.
Peter, thanks, man. We really appreciate your time. Everybody have an amazing weekend, and we'll see you on the next Mastermind.